Hello, it's Jeremy here. Now, in this video, I'll be walking you through my analytical process for how I cut my XAUUSD buys this week, and also my entry criteria for the initial entry and further entries that I placed as price kept moving on. Okay, so starting from strategy point, I trade order flow. Order flow is an advanced way of looking at market structure whilst looking to spot specific structures in the structure, right? But it's simply basically your normal market structure of higher highs and higher lows in uptrends and lower highs and lower lows in downtrends. And so on the weekly time frame, I've been expecting for gold to make a very plausible retracement. That's why I've not traded it much since the beginning of the year, because I felt that this impulse move, this buy that had been happening since December last year, had long been exhausted. And so I've been waiting for price to retrace to a proper, one of the most valid PDRAs that we had on the charts. So if I should guide your eyes with part two, this was higher low, higher high, higher low, higher high, higher low, higher high. And so what this means is that this was the last impulse move that price created. This was the last higher low to higher high. And so if we are to see a new buy that likely take out this previous all-time high, creating a new all-time high, price will have to retrace to a point of interest on the most recent impulse move to give us that move. And for me, that point of interest of that PDRA was this weekly mitigation block that we had right here. And so that's what I marked out and waited for price to come to test it for that buy entries. And this sales happened Thursday, Friday last week. Price had started retracing, and so I expected that Monday, Tuesday, Wednesday, or whatever this week will take us into these mitigation blocks. And if I should play price, we get to see when and how price dug into this. And so you can see here that price came. This was, I think, Monday. Price came on Monday or Tuesday to dig into to test this mitigation block and rejected out of it. Now, for me, my trading plan and my trading system is that whatever time frame my point of interest is, I come down 2 time frames lower to look for entry criteria and structures to give me entry. And so coming down 2 time frames lower will be the 4-hour time frame. So on the 4-hour time frame, what do we see? Now, this was what I observed. I did not enter on this first dig into the point of interest and rejection, because I always wait for price to give me a proper order flow leg, which price only created on this second retest, where price gave a higher low to create this higher high, right? And so following the same logic, I marked out my PDRA, waiting for price to come to test it. And for me, it was this third candle in here, which is on the 1-hour time frame is a mitigation block, but on the 4-hour time frame looks to be an order block. All right, and so I marked this out as a 4-hour MB mitigation block, right? And so all I did was wait for price to come here. I did not take any sales. But if I was to take any sales, this order flow leg that price had created here, that shifted market structure at this point, you can see cleared this low, right? Shifted market structure, created the fair value gap right here. Within this fair value gap, on the 15-minute time frames or 1-hour time frames, where I could have gotten entry for sales, but patience and discipline requires that I focus on only taking the trades that in the direction of the trend. And so I waited. So playing price, I get to see price. Okay, before I do that, if you check out my last post I made, you realize that this was where I gave my team members for entry on gold, right? This was the entry here. So my target is the previous all-time high that we have up here, right? And so if I should play it, you see price. Now price only came to $3 in on Friday. Now mind you, this entry was from Tuesday, right? And price only came to $3 in on Friday. Now the space between all that price did from Tuesday to Friday is where most accounts usually die, because a lot of traders are not patient, right? Because of all the ranging action that happened within Wednesday and Thursday, a lot of traders get confused about direction. Some of them know that they should be waiting for buys, but because they face the chart, they focus on the chart for too long, they forget the direction they should be trading in and all that, and a lot of accounts get blown within that space. But discipline and patience is what pays in trading, and discipline, it requires that you wait for your setups, for your A+ setups, delay gratification and the release of dopamine for long enough to get that good trade. And so this was my first entry. Now my second entry came after price had created a new order flow leg at this point. Now I told you guys already that I trade order flow, and I told you that order flow is simply a fancy way or an advanced method at looking at market structures, the market structure of higher highs and higher lows on uptrends and lower highs and lower lows on downtrends. Simply the same basic stuff that you already know, but with a little bit of tweaks here and there. Now there are 2 types or 3 types basically of fair value gaps, and the kind of fair value gaps determine the kind of point of interest you will use, whether you trade directly from the gap or find an overlapping point of interest, either a breaker block, mitigation block, or order block to trade from. Now this is a breakaway gap. This was low, high, higher low, higher high, then higher low here to create this higher high. So at this point, my this was the new impulse move I was looking to take a new entry from. And my point of interest on this was this mitigation block right here, because what we have is a breakaway gap. And breakaway gaps, you don't trade directly from the gaps, you trade them from points of interest, PDRAs that directly overlap with them. In this case was this mitigation block, and so all I did was wait for price to come down to the mitigation block and test it, and then give me entries, and which those entries I waited for them on the 5-minute time frame, waited for price to create a new valid order flow leg that I could take my entry from. Right, price took a while until price came back to retest before it gave me the order flow leg, and this was the order flow leg right here. Right, you can see this low, this higher low that created this impulse move, that created this higher high to cut this out. And so on this, my entry on this was this right here. Right, on the 15-minute time frame, let's take a look at it, check it out. Right, this was it right here. So wait for price to come in here and give me that entry. So my stop loss just below this low, my target just like before, previous all-time high. Alright, this is currently a 1 ratio 42 setup. Pretty neat, right? So coming down to the 5-minute time frame to observe. So 5 minutes time frame, price came back down to dig into this. So you see, price dug into it and kept buying back up. And then, but for this entry, I did not hold it for long. I closed on one of my accounts. I closed this at 1:5. I took this as a day trade, something to close the week with. And so I closed this setup at around 1:5 because I saw opportunities for a third entry, which I will show you guys in a bit. So price kept buying until it created a new structure that I was confident in. So that told me that price was likely going to. So I'll come back to the 15 minutes time frame. I think price has created it already. Okay, yeah. Okay, price is just creating it now. Now you can see on the 15-minute time frame, you can see that price kept. These impulse moves are not valid order flow legs because they do not have fair value gaps. Price only created the valid order flow leg when it created this move. Right? We have a swing low, fair value area, and fair value gap. Right? And so for me, my entry on this was at this order block right here, because this again is a breakaway gap. And so entry on the order block, targeting this entry is one I'm still holding with my first entry, targeting the previous all-time high. Right, the price had created stop loss just below that, below the body of the order block. And so I'm targeting previous all-time high also. Now, is it likely that price will get to the previous all-time high? It is, right? But are there possibilities that in the new week price might not continue moving in that direction? There are possibilities, right? That's why we keep watching the charts, keep observing, and react to whatever price shows us. But these are my three major entries on my gold trade from this week. And I hope that this video is helpful to you, and that it gives you an idea of what you should be waiting for, how patient you should be while you're on the charts, and some certain things to look out for to help you disqualify some certain trade entries and qualify others. So see you on the next video.